Hello, and today we're going to be starting off with a live technical analysis with some fundamentals. So, the predominant issue for traders I would expect today is the US CPI, which are due to be released later on during the day. So, we're going to be diving into our euro dollar chart. As you can see, we drew a downwards moving trend line since yesterday. The Bollinger Bands have narrowed. It's currently aiming to test resistance that we had placed yesterday at 1.1035. It broke above, and it's above the mid-range of the Bollinger Bands. In addition to the RSI indicator being near the reading of 70 implies a bullish market sentiment. So just quickly, let's just fix up our chart. The CPI figure on a month-on-month level is expected to remain the same. Yet on a year-on-year level, it's expected to increase. So if it does increase on a year-on-year level above 3.3%, we may see the dollar gaining some ground. As of now, we're seeing the potential start of a bullish market sentiment for the euro dollar if it breaks above R1. If it fails to break above R1, then I would expect it to remain in a sideways fashion up until the release of the US CPI rates. Why? As you can see, it's at the top range, so it's probably going to test resistance at R1. If it fails to break above, then I would expect to move in a sideways fashion, as the Bollinger Bands have narrowed, applying low market volatility. If it does break above, then I would switch immediately to a bullish outlook for the pair. You could also see perhaps the formation of an upwards moving trend line. It's still too soon to say, yet it seems that this might be the start of it if it breaks above R1. On the daily, as you can see, 2 days of straight gains for the euro. On the weekly, however, it appears to be at the same position where it opened last week. However, as of now, we're going to be maintaining a bullish market sentiment if it breaks above R1. For the pound, as you can see, it's also broken. If we extend our downwards moving trend line that we had placed yesterday, it broke slightly above, came back down, then broke above again, validating this downwards moving trend line that we had drew. However, we're neglecting the swing high. Therefore, a more accurate depiction would be to remove entirely the downwards moving trend line, replacing with an upwards moving trend line formed on the 3rd of August. As you can see, it's validating it very nicely. Look at the opening and closing of the bullish and bearish candles. It's right on point. So we'll be maintaining a bullish outlook for the pair, broken above the 50 RSI figure, implying a switch in market sentiment, perhaps towards the bullish side, broken above the mid-range of the Bollinger Bands as well. So for our bullish outlook to be validated, it would need to break above R1, moving towards R2. However, as you can see, it's found some resistance. So we could, in theory as well, bring up our support level at S1 at 1.26775. Why am I bringing it closer? Well, this could also be used for a sideways motion. We're seeing that there was resistance here and it moved higher, forming our upwards moving trend line. So we're keeping S2, S3 as it was before. And we're going to be moving in an upwards direction should the pair break above R1. Same with the euro dollar and same with cable. It needs to break above R1. It's broken above the mid-range of the Bollinger Bands. So if it fails to break above R1 and then comes back down to test support at S1 but fails to break above, sideways motion as well. However, for all pairs related to the dollar, the CPI rates have the potential to be market movers. So even if it does move in a slightly upwards fashion, there's nothing to say that it can't switch after the release of the US CPI rates. So I would be very concerned and very eager to find out the actual CPIs that are due to be released on later on today. For the dollar against the JPY, we said yesterday that perhaps our upwards moving channel was slightly too narrow. That might be the case. As you can see, it's broken above R1. However, what I would be pointing out for our chart, despite our upwards moving channel being a bit too narrow, look how the close of this bullish candle coincided perfectly with the 143.681 resistance level. Broke up and then opened higher, moved higher, and is now currently testing. I would expect the price action to revalidate R1 as resistance now turns support before moving higher. Note the interesting depiction between the cable, euro dollar, and the dollar against the JPY. On two occasions, the dollar appears to be losing ground to the euro and the British pound. Yet against the Japanese yen, it appears to be moving higher. Even if we did draw an upwards moving trend line, it would have already been broken. So I'm not going to be placing it at this point in time. Let's bring this back down lower to depict where we had it aimed for previously. RSI bounced off 70, still near 70, implying a remainder of a bullish market sentiment, perhaps testing S1 before moving higher towards R1 and R2. So let's find R3 together. My resistance level for R3, I'd place at this high here, 148.75. This would be my third resistance line. There is a bit of a disparity in regards to the positions. So we could even edit, if we do at the swing low, coinciding with this bullish candle and then a bearish candle here. So the order block at this bullish candle. And this would be my new support and resistance lines. As we have more data, we can adjust. So currently at the 147 big figure for R2, 148.75 for R3. This is previous and old S3. As you can see, it appears to be moving in an upward trajectory. However, we should note the difference between cable, the euro dollar, and the Japanese yen. Aussie dollar. So we had placed this for the Aussie yesterday as well. Let's look on the daily. On the daily, it had two days of losses. So losses for the dollar, but gains for the Aussie. It appears that the Aussie is weakening against the dollar. That was for the past 2 days. Now it's gaining on the dollar. On the 4-hour chart, where it seems to be moving to test resistance, to validating support and resistance once more. RSI near the 50. Bollinger Bands narrowing, implying low market volatility. We could bring S1 slightly higher. But the issue with bringing S1 higher means that if we do have a bullish or a bearish outlook, it would need to break 2 levels of resistance or 2 levels of support. So it would need to break R1 and R2 for a bullish outlook. It would need to break S1 and S2 for a bearish outlook. And if I am going to bring S1 higher, then I'd need to bring S2 slightly higher up as well in order to reflect the new position of S1. Otherwise, it would be too far away. So I bring S1 higher, S2. So we're going to have S1 at the 0.6510 level. If it does move in a sideways fashion, it's going to be very tight. That's why I'd expect it to break 2 levels in order to have a bearish or a bullish outlook. Otherwise, it could fluctuate between S1 and R1, slightly perhaps above, slightly below. But for the below, I wouldn't expect it, since it's the lower end of the Bollinger Bands. It's coinciding with S1. So I wouldn't mind if it breaks slightly above R1, and then market correction to move sideways. If that happens, we'll be looking at it in tomorrow's live technical analysis. But for now, we're maintaining a very tight range between S1 and R1. We've adjusted S2 to reflect the new level of S1, 0.6405. Throughout the week, we've had Fed policymakers contradicting each other. So the CPI today could provide some indication for traders as to the next potential action of the Fed. Dollar against the CAD broke below our upwards moving trend line. It's validated our support line with this bearish candle's wick. So right now would be switching to a neutral outlook for the pair. So dollar against the CAD, remaining between S1 and R1, moving in a sideways fashion. I would expect there is a potential for the price action to remain between this range, a narrowing of the Bollinger Bands between S1 and R1, and continue to move in a sideways fashion. Gold, gold here. Gold appears to be continuing its downward trajectory. Note how it broke below the S1 figure that we placed yesterday. As we said, this was also pretty close. So in order for our bearish outlook to be validated, it would need to break below S2. If I extend the downwards moving trend line that we have placed together yesterday, slightly adjusting it for this bullish and bearish candle, as you can see, it's still validating and it's moving in a downward trajectory. This could be a small market correction, having bounced off the lower bounds of the Bollinger Bands. This is no longer valid. I'd be keeping R1, so giving it some leeway to the sides to move to the mid-range. But now I'd be looking for my new S2, perhaps even S3. So for our new support level, we could place it. To place it here, then we need to move this lower. I'm looking to the left side of my screen, trying to coincide with as much open and close of bearish or bullish candles in order to provide more support. The way I'm looking at it is, if you're opening and closing at a certain point, and there's numerous occasions of that happening in the market, then that's more valid to me as a support and resistance level compared to if I simply use a wick. I'd like to see the bodies of the candles, which I think have more substance to them, in order to validate my hypothesis for support and resistance level. And why are we changing it? Well, if I'm bringing it lower, so the new potential is broken lower, then it needs to be readjusted. Then the rest of the figures need to be as well. This could be the potential of my new S3. Close before moving higher. Validated by not a swing low. It opened, validated again, validated by some wicks, but predominantly taking 1, 2, and 3. This swing low could have provided some support, but I'm going to be bringing it slightly lower. Note how this swing high coincides with the closing and the opening of both bullish candles. It might be slightly far away, but at least it's giving us some leeway for it if it does move significantly lower. But still, looking at the chart, S2 is too far away from S1. So what do we do in such a case? There's a discrepancy. The most recent historical data could be even used here. I'm using the opens and close too high. Looking at 1, 2, 3, 4, 5, 6 slightly. So my S2 would be at the 1888 level, 1865 level. This would be my S1, S2, and S3. And I would be maintaining a bearish outlook for the commodity as it continues to be moving in a downward trajectory. Small market correction, RSI below the 50 figure, implying a bearish market sentiment to continue. If the dollar if the dollar strengthens following the CPI today, I would not be surprised if gold continues to move lower, breaking below S1 and aiming for S2. We're going to be looking at oil as well. Note how oil has touched almost perfectly our support level at S1. Note that the closing of this bullish candle at the opening slightly higher, 84.05. Small adjustment, nothing too major. Continuing to validate our upwards moving trend line, therefore we would still maintain a bullish outlook for oil. We're going to be keeping the same levels, but for it to continue, we would need it to break above R1 and move towards R2. Simply staying put is not an option for a bullish outlook. It would have to break above R1, move towards R2. So I would not be surprised if there is a small market correction, since it's at the top of the Bollinger Bands, moving towards the midpoint before moving higher, as their size still near 70, implying a strong bullish market sentiment. We're going to be looking also at perhaps, who should we look at? Apple. I'd like to do wheat and then Sociedad General, Deutsche Bank, Amazon. Oh, Amazon. We're doing wheat, and then we're going to be looking at Amazon as well. So for wheat, it broke below our upwards moving trend line. It's broken above S1. Note how it's formed a swing high on S1. Just take a minute and look at slightly the closing figure of the bullish candle, how it opened and closed exactly almost on the 640.15 level, and this 4-hour bearish candle opened on the 640 prior support level. So this instantly becomes our new R1. We'll be maintaining a bearish outlook for the commodity on a technical basis. On a fundamental note, I would be expecting wheat to move higher in the short term. Why? It appears that the current not economic conditions, the current weather conditions are very unfavorable towards wheat farmers, wheat producers, and essentially, farmers. There is, in my opinion, a bit of an issue. However, the decline could be in anticipation that Russia may be rejoining the grain deal brokered by the UN between Ukraine, Russia, and Turkey, therefore perhaps moving it lower, or that Poland has asked the EU to facilitate Ukraine's wheat movement within the EU, therefore potentially increasing the supply of Ukrainian wheat into EU markets, simply not in Poland. Why? Their agriculture sector is also wheat producing and could be potentially impacted should the wheat remain in Poland, therefore hurting their own farmers. But if it were to move through Poland and move into the EU, then wheat prices could still go down without affecting Polish wheat farmers as much. 539.65, 610. Based on what we're seeing now, there is a potential for a sideways motion between S1 and R1, yet it's been validated again. So if this candle stays below, we're expected to continue moving in a downwards fashion. And lastly, we're going to be looking at Amazon. Amazon yesterday was in talks to become an anchor investor in British shipmaker Arm. Arm is expected to be one of the biggest tech IPOs this year. So it would be interesting to see if they do manage that. But for now, it appears to be moving in a downwards fashion, having bounced off R1. 142 level. Moving in a downwards fashion, aiming to test support at S1. Note how it's moving towards the 50, so perhaps neutral market sentiment, but we should also add perhaps our Bollinger Bands. The widening of the Bollinger Bands implies high market volatility. So if it does come back to test this one, simply as a market correction with coinciding with the mid-range of the Bollinger Bands, staying at the 50 RSI level, we will not be surprised if this is a temporary market correction before the stock moves higher. Therefore, at least for now, for the next few trading days, perhaps a bearish outlook for Amazon. Please note that as well, the US equities market, so stocks as well, could be potentially impacted by the release of the CPI rates later on today. So that would be interesting to watch, but purely on a technical level, would not be surprised if it tests S1 before moving higher. But for now, perhaps for the next few trading days, trading sessions, I'll be holding a bearish outlook for Amazon. And with that, that does it for today. Thank you for watching, and until next time.
Hello everyone, my name is Emily and welcome to another video. Today we're going to talk about automated trading systems. Automated trading systems, also referred to as algorithm trading, involves the use of an algorithm to execute trades according to the predetermined criteria. The systems allow traders to establish specific rules for both trade entries and exits. Once these are programmed, they can be automatically executed by a computer. The benefits of automated trading include more trading uptime, minimizing the impact of emotions during the trading process, and faster execution. To get started with automated trading systems, you need to decide whether you want to build your own system or use a third-party algorithm. If you build your own system, you can choose every aspect of the strategy and have a better understanding of how the system works. It could open and close trades based on timing or price using technical indicators to confirm your entry and exit points. For example, you could build a system to automatically buy 100 Netflix shares when its 50-day moving average goes above the 200-day average. Or you can automatically sell 100 Netflix shares if the market reaches volatility levels you are not happy with. If you are not confident enough to build your own system, you can use a third-party solution instead. This works in a similar way to a self-built system, opening and closing trades according to set criteria. However, you will have less control over the customization of these parameters. Whether you build your own automated system or use one which has been pre-built, it's important to backtest it thoroughly to make sure it works in the way you want before you put it to work on the live markets. MT4 is popular if you want a third-party solution because MT4 provides a marketplace where you can conveniently access pre-built algorithms to get started with automated trading. It's important to note, though, that automated trading systems have some downfalls that you should be aware of, like the possibility of mechanical failures. For instance, if an internet connection is lost, an order might not be sent to the market. Automated trading systems need to be monitored because of the potential for technology failures, such as connectivity issues, power losses, or computer crashes. Automated trading system can experience anomalies which could result in wrong orders, missing orders, or duplicate orders. If the system is monitored, then situations like this can be identified and resolved quickly. Thank you so much for watching us today, guys. Bye-bye.
So today webinar, I'm going to talk about multiple moving average strategies. Okay, but before I go to the presentation, just want to highlight some of you might be interested in our VIP room. So what you can do, you can just register. Okay, and then there is minimum deposit. You can see bronze 250, 1,000 or 2,000. So it depends on the tier, and then you will get to access to our VIP room. Okay, so how it look like? It's gonna be something like this. Okay, let's say if you have any question, you want to like talk with me and with the team. Okay, let's just talk about goal like okay, let me click and show. For example, you want to find, let's see, the entry, or you want to find a support and resistance, right? Actually, you can draw something like this. Okay, and maybe some of, for example, I draw Fibo, for example, and then you just might say like okay, like at, maybe I just put like Desmond first. For example, let's say, hey, Desmond, can you help? Oh, okay, can you help me to check my let's just say support and resistance level, just something like that. Anything you want to ask me and the team. Okay, and maybe you just highlight here. Okay, and then you just link object, and then you click somewhere here, and then you just confirm. So when you send in to me, okay, I will get the chance to highlight, and then to see like which level are you talking about. And also our VIP service, we do send kind of trading idea. If me and the team we find some a good setup, we will send to the VIP room as well. Okay, so it's something like this. Okay, just if you already have the account, and then you already have deposits at least 250. Okay, and you can just maybe let the IronFX know, and then you can join our VIP room. Okay. Okay. All right. Just let's start with webinar today. Like I say, today topic is gonna be multiple moving average strategies. So again, disclaimer: the information in this webinar should not be considered investment advice or any investment recommendation, but instead just educational material only. Okay, if you want to do the own trading, just do it diligently. All right. Okay, so it's about myself. My name is Peggy. I'm a trade analyst and a prop trader. At What is it? Can you see me? Okay. Um, at the Every Fortune Group. Okay, so I do trade a prop trader trading as well. Okay. So today agenda. Why is that clicking? Movie? Why? Sorry. Mm, so today agenda, I'm going to talk about what is multiple moving average strategies, how do you use it, and how you can improve on it. Okay. So today, strategy I'm going to talk about is the GOP multiple moving average strategy. Short form is GMMA, is Daryl Goofy. Okay, so he's an Australian guy. He is the one who created this technical indicator. Is quite simple to use. If you want to find like support and resistance or crossover, how to get the entry, buy and sell. Okay, which is I will going to talk a little bit later. Okay, so just a little bit about GMMA. They are using moving exponential moving average, which is EMA. Okay, so sorry why it's not moving. Okay, so there are two type of moving average. So in the screen you can see that the green line is a short term and the red line is a long term moving average. Okay, so sorry guys, why I cannot see. Um, okay. Okay, so the GMMA, they are using two different EMA, in the offer to analyze the market behavior on multiple um um like multiple EMA. Okay, so how do you use it? Um, okay, how do you use it? Is okay, you can setting on trading view if you are use trading view or you use MT4 MT5, but I think these are indicator you can find in trading view. So the short term EMA typically set at 3 5 8 10 12 and 15 day period EMA, and the long term EMA, which is the red line, typically set at 30 35 40 45 50 and 60 day um moving averages. Okay, so you can see that. Okay, and the MMA track the activity of the two major group in the market. So those are investor and trader. Okay. Oh, okay. So like I say, two group of the major group in the market, which is a trader, which is a trader is a short term. It's gonna be a green color line, and the investor, which is a long term, is a red line. Okay. Okay. Uh, okay. So the trader they are think about short term. That's why we use 3 5 8 10 12 and 15 day moving averages to identify um, the entry. Okay, so they're using the green line, and we track. Okay, we do track investor. We are using 30 35 40 45 50 and 60 day EMA because the investor they think a long term trend. Okay, let me try to move it. Yeah. Sorry, guys. I don't know why my presentation like another screen is not moving. Yeah. Okay. Like say the investor, that take more time to like connect the change in trend. So we track the with investor activity by using those EMA. Okay. Uh and how you find the trend? For this indicator, you can use to find the trend, finding trend here. For the investor long-term trend, which is gonna be the red line, and the trader gonna be short-term trend, which is the green line here, which is the arrow you can see in the screen. And the trading plan, actually you can, how it so is that we use this strategy to finding agreement on what value between the two group. Okay. Okay. This. Okay. So the trader, the short-term trend, they represent, or who are, attempt to capture the short-term profit. It could be those like scalper who like in and out the market very often, and like I say, the long-term investor who is more to like more to like take time to identify the trend, so they tend to hold the position longer than the trader or like scalper. Okay. Also you can use the GMMA to find a strong trading opportunity. So how is that as you can see here in the screen. Okay, let me see. Okay, like how you identify that the relationship between the two group tell the traders about the trend of the market, a change in price direction that is well supported by both short term and long term investor. You can see that the investor signal is very strong trading opportunity. So for a GMMA, is a easy indicator, I know, for you to use, because it allow everyone to determine the overall trend. So you can see that it's very clear direction if you use this indicator. So you can identify, you can see red and green. It represent trader and investor really clearly. And also it also help you to easily identify on or trend. You can see that the red line is a long-term trend. Okay, it really slope down, and the green one, okay, is a short term. It's a like trader. You can see that it's like pull back to the long-term trend, which is red line. Okay, like I said, the goofy indicator is very easy indicator, like that like help your body to determine all the trend quickly, and like without any personal bias, right? And of course you have to know that how to use it correctly as well. Not only like, oh, you see that, or when the green line crossing the red line, and then you just want to make a short or make a sell order. Okay. Okay. Again, here I will show you how to get the easy identify the overall trend. Okay. The GM. Oh, sorry. Um, why that's okay. Okay. So the GMM also offer the insight into potential or the period that could be consolidation by the signal, or it could be the direction of the market, and you can see that the highlight here or in the square that I put on the screen, the reversal, you can see that when the short term close below the long term, which is the red line, you can see that there is going to have reversal soon, and you can see that after it's closing, it's go to the bearish direction, right? The green line close below the red line. Okay, and you also can identify the consideration here. It's a ranging market, right? When the two group of the GMMA is kind of like close each other, like here ranging market, you can see that how to identify trends. So I think this indicator is very good, personally very good for identify the trend if you know how to use it. Okay, and also I find this indicator is 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 quite good if you know how to um combine with the price action or another indicator, which is I will talk about it later. Okay. Okay. Yeah. Just now I mentioned price action as well, right? You can use this this indicator combined with the price action or Ichimoku crowd. Okay, I will show it you guys later. And how you can implement or how you can read the GMMA is here. Okay, I show you the real chart. Not moving here. Okay, so the degree of separation, you can see that when the short term moving average is a green line, it's close above and is far away from the red line, which means that there is very strong trend. Okay, you can see that. And then when there is a narrow separation or the crossover, it's going to like have really 10 is weak, or it's going to have like change in trend as well. You can see that. Okay, on my left, let me see if I can use my pen here. Okay, right, you can see that here. So when a narrow separation or crossover, so it's come from the cross over here, go to uptrend, right? And from here it's crossed over. So it's change trend direction going to downtrend here. Okay, so you can use this indicator, like I say, identify trend. The green line cross above the red line is going to go to bullish. If the green line cross below the red line, it's going to bearish trend. Okay. Okay. Mm, sorry guys. Why I cannot move the slide here to okay. Why is that move over here? I'm not so sure why. Okay. Okay. So from here, I just mentioned the crossover. So the crossover of the short term and long term, which is over here, right? The bullish, which is say the crossover here, the green line cross above, it represent the trend reversal. So from bearish, it's going to bullish reversal. So it's go up, and bearish reversal. You can see that the short term close below the long term, which is green, close below the red line. It's going to bearish reversal trend. Okay. So how is the ranging look like? Okay, it's over here. So if the line is very heavily intersected is meaning that it's lack of price trend. You can see that when it's ranging or consolidates over here, so it's not a good time for you to trade in the trend direction. You might have to wait for the price to like a big breakout of this box first. Like you can see here, if a price to break out or close below, and then you can make a short from here. Okay, so it's really, like I say again, if you want to use the indicator, you can just go to trading view and then search for GMMA, and then you can try to use this indicator to identify your trend, the market trend. Okay, so how is the long, or you want to buy the position? Like I say again, in here in the screen, you can see that the green here short term is cross above the red line. So it's over here. If you combine with the price action, you can see that this is one of the price action here. Okay, and then there is really big bullish candle over here, and then it's close above somewhere here. So when it's cross above here, you can just place the buy order over here. Okay, because here it's going to already cross over. And after that, you place the buy order here. So you can just put the stop loss over here. Okay, and then you can see that the price is bullish. Okay, and what about the short or sell example? Again, bearish trend. So when you see that the price or the green line is close below the red line, which is the short-term close below the long-term trend. Okay, and you can see that this is heavily big bearish candle. Okay, so when it's close below, you can just put the sell order over here, and then you can put the stop loss, or you can put at the high here. All right, and then you can see that the price is going down, and then even those like go up and then retrace or pull back at the support area. Okay, and then it's continue going down. All right, like again, if you want to put the short or the long, you can put as long as like the price is not go beyond the long term. Okay, it could be go up here and touch it, and then you can make another sale order here. Okay, and just make it down, but cannot go above the long-term trend. Okay, if you want to put the sale order, right? And again, like I mentioned, that that is very a strong trend over here, because you can see that the separation between these two is really widen. So this very strong trend. Okay, short. Okay, okay, back out. I just mentioned, okay, back out from consolidation here. Again, the separation is really widen here, a very strong trend, and then you wait for the breakout just now, right? The green line cross below the red line. Okay, and then I you say it's really strong downtrend. Again, you place the sell order here, stop loss here, and then you can see the price is go to downtrend. So I think this is one of the indicator for me personally to use for identify the trend. Okay. Okay. I have another example of the like long or buy position. For example, here, let's say you already enter the order, like the buy order over here, right? Because you saw that there is a crossover at this area. Okay, and then you can see that you want to add more position. Okay, you have to identify a file that there is no crossover during the trend. There is no crossover, right? And then when you see the price is going until here, okay, and then you see that the price is pulled back to EMA short period EMA over here, and then you can put the buy order more if you manage your lot size very properly, or if you are not over trade, you can put more buy order over here. Okay, and you can see that the price is react to short term moving averages here. Okay, so this how you want to add more to like buy position. You can see that, right? So when the price it touch or react to long term over here, you may exit the trade because there is potential for price. Okay, from here you can see the price is changing already. So if you see like that, you might have to exit the trade. Okay, just close the trade and then exit, and then you come out of the market and see again where you can find the opportunity to enter the trade. Okay, for the short term, okay, for the short term you can, oh no, let me see. Okay, wait, sorry, why is like that? Back out. Okay, for the, sorry guys. Okay, for the short example here, again, you see that price really close or below the long-term trend. Okay, and then you have a chart over here, and you can see that the price is a pullback. Okay, here pullback. You can add another order here, go down. Okay, pullback. You can add another like sell order over here. Okay, you can see that here, pullback. You can then you make another order over here. Okay, as long as the price is not go beyond the long-term trend, which is the red line, then you can add sell position if you manage your lot size properly. Okay. Okay, so there's a tip for for you guys how to use the GMMA is that when is the like how you determine the really strong trend, which is the distance between the red and the green moving averages here. Okay, which is a circle over here. Okay, this is like I mentioned, it's very have a strong trend direction. So this is gonna be downtrend. You can see that, right? And then the separation is wider from each other, is far away from each other. And one thing is that GMMA is, let me see, is act as support and resistance. Okay, so how it works is that you can see that when the price, maybe make is the example over here, so you make a sale, right? And then you see that price is coming down, and then it's reverse. You can see that this is add this resistance, add resistance here. Okay, so this is one of another, they act as upon resistance. What is about the support here? You can see that price is on uptrend, it pull back to the long-term trend. Okay, this act as support, and then it's pull back, resistance, and then this one pull back to resistance again. Okay, it's act as support. Okay, this is also act as support level. Okay, so you can use it to add more position or exit your trade as well. Okay. Okay, so how you can improve it, right? I mentioned that you can combine with price action or Ichimoku crowd if you know how to use it. Let's say in the screen you filter out, you use like just want to get a confirmation that is this going to the correct trend direction. So you pull out the GMMA right here. Okay, and then you see that there is a crossover here. So it's going to change direction to the bearish reversal right here. And then you can see that price, short-term cross below the long-term, which is green cross below the red line. Okay, and then you can see that price going down, and then you also can see that price also below Ichimoku crowd here, meaning that price is on downtrend. Okay, so you can use these two indicators to this to find the trend direction, or like to help you to get a confirmation or confluence. Okay, so these two you can use this to identify the trend. And then another one I'm using, you also can use like price action. For example, let me find the example over here, like price action. Okay, for example, like if you know how to draw like support and resistance, right? You can see from here. Okay, draw here. This one is already overlap resistance, right? So this used to be resistance. Okay, and then it's break above resistance, and then now act at support. Okay, from this level you can see that price is going up and then pull back here to resistance level, which is you make a line here, and then it tested as a short term moving average, and then you can see that there is have a big bullish candle over here. Okay, and then you can from here, after it's closed here, you can place the buy order over here, and then you can see that the price is keep going up. Okay, this is like one of another indicator you can use it. And again, GMMA is a standalone indicator. So as you know, EMA is lagging indicator. So if you want to wait for the price or to the EMA to cross over, for example, I just go back to this one. Okay, like the price to cross over, I just want to find the clear. Okay, if you want to wait for the price to cross over right here, it might take quite a long time for them to close, and then you may miss the entry as well. So you use this one, use this indicator combine with maybe your own indicator, or you can combine with Ichimoku crowd together with price action, and then you can get a good entry from there. Okay, all right. So I personally use GMMA just to identify trend. So okay, let me see. All right, guys, thank you so much for tuning in today, and tuning for the webinar today. Okay. Let me know if you have any question. Okay, I will end the webinar soon. I think they have a recorder, right? If you don't understand any part, you can just go back and watch it again. Okay. I'm not sure why it's not moving at all. Okay. Okay. All right, guys. Thank you so much, guys. Thanks for joining. Hope to see you guys again, maybe next section. Okay. Have a good evening or have a good morning, a good afternoon, wherever you are. All right. Thank you. Bye. Bye.